Good morning, everybody. David Safransky, your host, Financial Revelations. Quick hits. I'm not going to go through how to get in contact with us. That's all rolling down here someplace. But what I do want to tell you is I'm looking at bond rates this morning, and I see mid-June, end of July, the highest rates right now. So if you're going to buy a bond, let's stay short on the bond market. And I kind of do I know we're up against the kind of like the top of the S&P 500 range, but I'm starting to dip my toe back into the water in equities. I've been waiting and waiting and waiting, and people have been calling me and saying, why is my money not invested? So we use the bond market as a short-term holding tank, short-term bonds. You can get, as of today, the 19th, into the low fives, into July, into the mid fives in June. So the yield curve is still inverted, turned upside down. The shorter the bond, the higher the rate. The longer the bond, the lower the rate. It's supposed to be the opposite. The longer you put your money at risk, the more return you should get. And I think we are going to get there. I think we're going to get there probably by the beginning of next year. And I don't think that the Fed is going to lower rates this year. I think it's impossible for the Fed to lower rates this year. In fact, I think they're raising rates in June. I think Chair Powell is definitely going to raise rates in June. The unemployment rate's still unnaturally low. Inflation's still unnaturally high. My money's on a rate hike. Now, I know people are trying to talk us out of that. They're trying to say, no, they're going to stop. And they may stop. It may happen. I think there's a 25% chance that they stop. I think they're raising. And then we'll look at data in July, because I thought they were going to go May, June, July. I think they're going May, June, and maybe July. And if the data does improve substantially, maybe they would stop after June. I think they're going June. So look, short-term bond market, 1 month, 2 months, maybe to August. There were some decent rates in August also, but I want to keep my money short because I want to be in the stock market. That's really where I want to be. Now, if I could get the corporate bond market into the sixes, good stuff, not junk, good stuff, maybe at the lower end of the credit scale, I'm interested long term. So we're getting to that point. Your portfolio is going to be more balanced. Talk to somebody, before you do any of this, talk to somebody who knows the markets. Talk to a professional. It doesn't need to cost you anything. You can always contact us. We'll talk to you for free, by the way, 100% free. You don't ever have to work with us. I am David Safransky, a real American, a true red-blooded patriot, and the voice you can trust.